Welcome to the Roy Morgan Weekly Update. In a week where Treasurer Jim Chalmers raised the prospect of eliminating tax advantages for superannuation balances of over $3 million, and Anthony Albanese participated in the Sydney's Mardi Gras parade on the weekend, Roy Morgan government confidence dropped 6.5 points to 95.5. This is the lowest since last year's federal election. Now 39% of people, only 39%, say the country's heading in the right direction, and 43.5% say the country is heading in the wrong direction. In terms of voting intention, support for the Albanese government was down 2 percentage points to 56.5, still well ahead of the coalition on only 43.5 on a two-party preferred basis. Consumer confidence was virtually unchanged at 80 this week, but dangerously close to the signal for recession. The Reserve Bank is set to meet next week and will decide at that meeting whether to raise interest rates for a record 10th consecutive meeting. Inflation expectations were up slightly this week by 0.1%. Australians expect prices to rise by 5.2% annually over the next 2 years, and so far they seem to have a good sense of what's to come. We at Roy Morgan use it as a lead indicator. During 2023, inflation expectations have averaged 5.3%, significantly below the peak of 6.8% that we reached in November last year. And on a monthly basis, smoothing things out, they've been trending down since November. We'll get the first indications of the official ABS inflation numbers for 2023 tomorrow, when the ABS release their January CPI indicator. Now, although consumer confidence this week was virtually unchanged at 80, there was a lot of movement in different directions for different population segments, particularly by housing status. For those who own their own home and own it outright, consumer confidence was up 3.4 points to 84.4. These people are probably older, and super changes will have very little impact on their lives. But this positive movement was cancelled out overall by a big drop for people paying their homes off, people with mortgages, down 4.4 points to 69.4. This is the lowest consumer confidence for this group since the early days of the pandemic, heading into the RBA's next interest rate meeting next week. And it's easy to understand why mortgage holders are nervous. The latest figures on mortgage stress through to January show 24.9% of all mortgage holders, that's almost 1 in 4, are considered at risk, the highest in more than a decade. And this equates to almost 1.2 million mortgage holders at risk and is up by almost 500,000 mortgage holders compared to a year ago before the Reserve Bank began to raise interest rates. In addition to that, there are 15.4% of mortgage holders now considered extremely at risk. That means based on the value of their home, what they owe and what they earn, these people would be unable to obtain a new mortgage. So that's extremely at risk. And this equates to 710,000 Australians extremely at risk, now above the long-term average for the first time in this hiking cycle. Looking forward, if the Reserve Bank increases interest rates in March and again in April as expected, mortgage stress is set to soar to nearly 30% of all mortgage holders, over 1.4 million people. This would be closing in on the record high during the global financial crisis, when 35.6% of mortgage holders were considered at risk. And the RBA's rapid tightening of interest rates over the last year, the fastest increases to interest rates since the Reserve Bank's independence in the early 1990s, are really starting to hit mortgage holders. Without wanting to leave you on a negative note, it's crucial to remember that the biggest risk factor for mortgage holders, more dangerous than an increase in interest rates, is a substantial drop in income, usually associated with losing one's job. You know, if you keep your job, you can usually keep going on, but once you lose your job, really challenging. And although overall employment is over 500,000 higher now than it was pre-pandemic, the latest Roy Morgan employment figures do show a slight rise in unemployment over the last 2 months, as do the latest ABS figures. And that's a wrap for this week. Subscribe for free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest on consumer confidence, inflation expectations and voting intention again next week. Take care. See you next Tuesday.